Moolala is brought to you by the nonprofit credit counseling agency Credit Canada. Open banking. If you've never heard the term before, we're going to explain it for you. If you have some sense of what it is, it kind of sounds like the promised land, right? Like you've got control over your data, you can connect simply across multiple institutions. It's a dream, but how does it work? And when, here in Canada, are we actually going to see it? For more on the definition, the possibilities of future banking or of open banking here in the future in Canada, we're joined by Andreas Park. He is professor of finance at the University of Toronto. Hello there.
Hi, Bruce. Thanks for having me.
What does the term open banking mean for you?
So it is a bit of a mouthful, but the general idea is that financial institutions are required or offer a so-called API, that means application programming interface, which allows a third-party service provider to access the data at a bank or at the financial institution so that they can offer a client or customer some services.
And what are some of the benefits of that technological change to a client?
Well, you mentioned some earlier. So let me give you an example. So most of us have various savings accounts. We have maybe an investment account with an investment advisor. We may have maybe an account at a cryptocurrency exchange. We have insurance and so on and so forth. And you can imagine that a service provider goes out and collects and collates all of that information and gives you a full sense of what your financial health is, what kind of risks you're facing, and where there's some shortcomings. That's quite important, for people who are later in their life and who want to, later meaning people over 30 who want to plan for retirement and who need to make sure that they are not exposed to a particular type of risk, for instance.
How does this technological change differ from what's currently available in the marketplace, where a site can scrape that information? You give it your password and it can go and find the account balance at another account and the number of shares of a particular stock. So that information is somewhat available currently. How is that different?
Well, the most basic difference is that with screen scraping, as you describe it, you have to do this on a one-off basis. So you have to log into each account separately, and it's only done when you actually perform the action. Whereas a genuine open banking application would be able to do this on an ongoing basis. Now, this isn't just one example, of course, right? So the information, the idea of that you can collect all of your information, you could use open banking and fintech providers for a large variety of other things. Let me give you an example from the UK, for instance. So one of the things that, and not everybody may find this palatable, but I think it's a real problem, is that the elderly are often subject to scams and frauds. And oftentimes, so they're really targeted by criminals. And so one of the problems is that the elderly, when they get targeted from a fraud, they're actually not willing to accept it or to admit it, or it takes their time to act on it. And so in the UK, there's a service where children can have alerts sent to them if there's large money movements on their parents' bank account, so that they can have a look out for their parents' financial health, if you want.
Interesting. So for countries that are further ahead than Canada, what have been some of the insights on the competitive landscape? Because we know here in Canada, there's like a big 5 or 6 banks, some big credit unions, and that's kind of the choice. There's a bunch of fintechs that augment that, but not a lot, versus the US, where there are thousands and thousands and thousands. How does open banking shift the competitive landscape?
Well, to be clear, the US is sort of in a bit of a quagmire. They're still not that far ahead when it comes to these types of solutions. They're following more of a market-based approach where some banks start to offer it, and then they're hoping that others are following. I think the strongest example for open banking is the UK, because they mandated it legislatively. So some of the things that you see is that there's just a large number of new services that are available to people. If for instance, when I go out and ask my students, and I teach a class on fintech, is what do you want from your bank? What kind of services do you expect? And my students very quickly come up with any number of ideas that none of our banks provide, like budgeting, proper budgeting, putting money aside into various different pockets, and so on and so forth. And all of these tools are available essentially in the UK. There is a large variety of how you can manage your finances and what you can do with your money.
What is the current sense from Ottawa in terms of their interest in open banking, their appetite for regulatory change? How long do you think it will be until we start to see some real progress on this front?
Well, I'm not going to hold my breath. I would hope that at some point we kind of start getting a move on. Essentially, the Liberal government had promised us this in the 2015 campaign when they came to power first, that they would have open banking. But keep in mind the Canadian Bankers Association is dead set against it, because you see the problem of, or the principle of Canadian banking is nobody comes between me and my customer. Right. And essentially what fintechs and what open banking applications would do is precisely that. They would come between the customer and the financial institution. So I would imagine that there's very intense lobbying going on in Ottawa against open banking. And I think that sort of partly explains why we have not seen this. I do want to say, so one of the first things that we actually need as prerequisite is almost that we have real-time payments, which is something we still don't have in Canada. And just as a tidbit of information, we've had the so-called Payments Modernization Initiative, which has been going on since 2012. And we still have not seen any meaningful result for the consumer of this whole initiative. And if I can throw one more tidbit at you, because that's really exciting. Brazil, which is, I wouldn't say, I mean, it advances as an economy, but I would like to think that they're behind us. It's much bigger than us, has many more banks. They've been able to pull off a real-time payments solution, which has an uptake in Brazil of 70% of the population within 9 months at a cost of $5 million. So when our banks tell us it's $1 billion investment, it's really, really hard to do, it's just simply not true.
And what did they do? Did they make a deal with the devil? How did they pull it off?
Well, how did they pull it off? It's a good question. So they actually set up a very clever system by which, people could use an existing bank account, register with the central bank, and that allowed them to access a particular type of system which allowed real-time payments. And then they forced the financial institutions to sign on to it.
Sounds very simple. When you look at the consumer, so we're a show about money, we focus very clearly on the consumer. Is there anything from a cost saving standpoint that they could hope to see down the road? I can see the efficiency, I can see the fraud prevention, I can see the value of having the big picture at your fingertips. Could it reduce bank fees? Could it reduce the annoying Interact e-transfer charge?
Yeah, so
that is a very interesting laugh. That is like a knowing laugh. That laugh says many things that have yet to be articulated.
Well, I gotta say, I moved to Canada in 2003, and I was really quite shocked considering how many bank branches you see everywhere in the country, how far behind we were. And that's 2003. And, we are still unbelievably behind in terms of innovation in financial services. And also keep in mind, the Canadian customer is incredibly lucrative. So the second most lucrative market in the world is Japan, where Japanese banks make about $500 to $600 a customer per year. Whereas in Canada, the Canadian banks on average extract something on the order of $1,400. So almost 3 times the amount from the customer. And it comes in so many different levels. It starts with payments. We all pay, essentially we're all paying back the fees that we have from using credit cards and the like, and debit cards. A bank account in Canada is very expensive, considering that we're giving our money as deposits for free for the bank to lend out, right? And there's a lot of different areas, but I think most importantly would be one, and this is kind of dear to my heart, is that just people would just have more control over their finances, have a better view of their finances, and would just have a better way to manage their lives with the right tools available to them.
What are the connections between open banking and Bitcoin, blockchain, crypto, laundering, other things that we talk a lot about in terms of big themes that affect the system?
Good question. So I would look at them separately. I think open banking is really more of the interaction on the consumer level, that you as a consumer can use what you already have in the existing world, get financial services better. I see blockchain, I'm forgetting Bitcoin, but let's say blockchains like Ethereum, probably the biggest invention that came out of Canada since insulin. I see that more of an infrastructure as a big financial infrastructure. It can do a lot of different things beyond, let's say, consumer banking. And I don't really see the direct relation there. It could tie in with this very nicely. So fun fact, Ethereum actually has everything in Ethereum is based on accounts. The size of the account in terms of number of characters, they're set up to be exactly the same as the European banking standards for account numbers. So it's the same length. So it essentially could directly tie in if so desired. And then I forgot, what was the third thing that you mentioned?
Money laundering.
Oh, money laundering. Well, money laundering and open banking, that's really not, I can't see that there's a relation. You already go through, a KYC process. There are very firm standards and laws that have to do with how payments and money flows and what has to be reported when. That actually applies really quite broadly. I don't see that open banking would cause a problem there.
Just as we wrap things up here, you mentioned how far the UK was ahead of Canada. What can be learned from how open banking evolved there that could affect how it might evolve here? Was there a groundswell of consumer support? Was there leadership that was able to build bridges between the financial services sector and government? What really made the difference?
So the origin is slightly different. After the financial crisis in 2008, people were incredibly dissatisfied and angry at the banks in the UK. They engaged in some pretty callous behavior. And so therefore the government had a very easy time convincing the general population that having an open banking solution is necessary in order to gain back some control from these monstrous organizations. We don't have the same sentiment here in Canada, and I think this is one of the reasons why there's no political will to actually do anything about it. So I think they just started from a very different point. The other thing that is actually noteworthy is that we like talking about this, and obviously I'm somebody who is pro innovation. I like to see things happen, but the uptake in the UK is not super dramatic in the sense of that all the banks and all the income is sort of going away. I think in the population about 30 to 40% only actually have access to or use an open banking type product.
Interesting. Very interesting stuff. Andreas, thank you for joining us today.
Oh, it's my pleasure. Thank you for having me.
Andreas Park, professor of finance at the University of Toronto. He was here to talk about open banking, what it is, how it could work here, and some of the dynamics that might lead to to more Canadian enthusiasm for something that is an eventuality, I think.